Welcome back to Income Trading 101. Today we're going to look at one of the old school blue chip stocks, AT&T. As you can see, this company pays nearly $2 a year in dividends, a little more than $2 a year actually. Had earnings back in January. This stock has been, well, it certainly is older than me. It's older than most folks out there. It's been around a long time. Ma Bell, right? So let's go ahead and we'll take a look at this as we always do. And what I like about this stock is that it's actually experienced a lot of different moves, a lot of different charting uh, periods are represented, or a lot of different uh, chart types are represented in this graph. So you see how it went all the way up. We had a high up in the $44 range. Currently are trading about $14 less than that. And let's go ahead and just pull it all the way on out. And you see it had a significant fall back in 2020, back in March of 2020, all the way from 38 down to 27. So lost, more than $10. And then it's really been kind of grinding it out since then. So we're going to just go ahead and look at this period, kind of uh, the comeback. I love comebacks. Who doesn't love a great comeback story? So let's go ahead and take a look at this. We're going to do what we always do, in case you guys are afraid of my current energy level. I'm just going to add a few moving averages in there. Switch these around like I always do. I'd like to see the 10-day in green. I'm going to do a 20 in red. Let's turn that bad boy to red. Here's the 20-day. 20 trading days for equities represents a full month. And then we're going to do a 60 down here, which represents more of a 3-month. We'll leave that yellow. And let's take a look. So what's interesting, we have a lot of volatility over the last year, right? I mean, look at this thing. From a high in the, a high of $33.24 down to a low on the year of $26.35. I mean, that's and that all came in this one move. And we had a pullback that didn't quite retest the high, didn't even fully close those gaps, the previous gaps that we saw, like this huge gap had happened back on, between June the 11th and June 10th of 2020. And, I'd say the new year has brought us channeling markets, which is certainly not a present that I would ask for unless you're trading options. If you're trading options, there can be some nice trades in there, iron condors and selling spreads and whatnot. But for now, just looking at the moving averages, it looks like, at least on the daily level, that the 10 is higher than the 20, which is higher than the 60. So this is technically in line for an uptrend. My one hesitation in all of this is the fact that, well, number one, the moving average for our short-term moving average is very close to our current pricing, which makes me trust this less. And then the other thing is that just the visual, these prices have been rather flat, which makes me put a lot less relevance in that daily average. So, wow, at the 1 hour level, it's even tighter. Let's look at this. And it's, it's undecided because you have the 10-day higher than the 60, which is higher than the 20. So a bit of congestion. And for those of you who can't see it in the visual, you can see it in the upper left-hand corner with the actual calculations. So I'll swing over there. This area actually shows the calculation, or the actual quantitative value of those moving averages. So let's see if the 30-minute or the 15 have any more. Wow. Wow, wow, wow. It just continues to get tighter and tighter. Let's see what the 15-minute does. And more of the same. This stock is hardly moving. This is perfect for option trading, actually. You could sell call spreads and put spreads, which creates an iron condor. If you are interested in that sort of thing, I talk about option trading on my podcast, The Weekly Option, and there's a YouTube channel called The Weekly Option. So just Google The Weekly Option Podcast and look at that channel. There's a nice little primer, if you will, on some of the trades I look at, like credit spreads and debit spreads and whatnot. But this is pretty amazing for as far as low volatility, just not a lot of movement in those shorter time frames. So let's go ahead and get rid of these moving averages. Now, given that there's been such tight movements, I can't imagine that the MACD is going to give us that much more clarity around what's going on in this. You do see some periods of, you know, like this crossover of the MACD and the signal line really would have come late. You could have still made some money, but if you had waited for it to cross the zero line, like I often do, you would have missed the whole move. This buy over here actually would have been profitable. So and then you've got this period of just sort of sideways trending markets, and you see the sideways trend in the moving averages, and then this crossover back here that happened on March the 4th did lead to a little bit higher move, but it was only a $2 move. So depending on where you got filled, that was either profitable or just irrelevant for you. Let's take a look at the 1 hour. And granted, since these all get tighter and tighter on these shorter time frames, I don't imagine that the 1 hour or the 30-minute or even the 15 are going to give us a great indication of where things are. Like, for instance, you know, this crossover here doesn't really give me, there's just not a lot of room to make any money in this. So let's say I caught the low over here on, on the 22nd of March, and that low is 29.76, and then I exited, around the high up here, so I went from 29.76 to $30.26. It's 50 cents. Now, 50-cent move can be relevant depending on the price of the stock, or not relevant, but given some of the other assets that we look at on this channel, I definitely, 50 cents doesn't excite me that much. And that's 50 cents. That's from buying the low on one day and selling the high on the next day. That's unlikely. I mean, I've been trading a long time. Every now and then you get lucky, but, to plan to buy the low and sell the high on your trades is you're asking for disaster. Let's just stretch this out with the 15-minute one more time. 15-minute does give some bigger swings than the MACD, but given that actual price didn't change, didn't move that much, I still would be very hesitant to use the MACD on such a on this stock right now. Let's go ahead and take it back to the day move, and we can let's see, we can do a couple of things. First thing I'm going to do is just get a quick Fibonacci snapshot from low to high and where we're sitting right now, right? So that's that. So looking at this, price got all the way to the 61.8. It actually broke beyond that out over here. Broke beyond it on the 26th of February and then came back above it a few days later. And right now we're sitting around the 38.2% retracement of this particular move. But I do want to, before I go into some other analysis, I'd just like to get a sense. I love that that there's this blue line across. I want to see what this current price level has been in the past, right? Has it been, resistance? Has it been support? Like, what is this level? And they've already drawn in this blue line. This blue line shows us where we are right now at $30 on this stock. So you can see that there was, it kind of played a little bit of support here in 2019. played a little resistance back in 2018, certainly in 2020. Prices just sort of hovered right around there before falling below. Went above it briefly, and then it seems to have played some resistance and now a bit of support. So these are some interesting moves, because it would be very easy to get chopped up on a stock like this. Very easy. For me personally, I would most likely not touch this stock, just because it doesn't fit my personality well. I think it's important to know that about yourself, right? I know the kind of things I get suckered for. Like, I would get suckered into believing something was a breakout. Like, oh, that's definitely a breakout. And the truth of it is, it was just a continuation of the current, current symbol, or the current stance. So, yeah, I'm not. Look at that. I mean, so I guess what you could end up doing is, for trading around 30, if you're able to sell like the 28-27 call spread, and the the 28-27 put spread, and the we'll call it the 31-32 call spread, that might be fun. It might be easy money for a little bit, as long as there's no breakout. I do see this. Look at there. So April the 22nd, there is an earnings update, but realize that April option expiration, I think, is on the 16th. I'll confirm that right now by looking at a little calendar, and I'm correct. Options expiration for the monthly options expiring in April is April the 16th. So you could trade a spread around this stock, looking at it as a low volatility play. So you would look to sell a spread and know that earnings really, it may not be affected. Earnings might not affect your position, because it's going to come in after or your position will expire after earnings. So this is a tough one, though. I actually prefer more volatility, like this down here. This move that we saw in March, fantastic. We had a nice little pullback, and then I don't even like this period, even with the trail down. Like, I prefer movement. So if that's you too, it's another thing. You have to decide what your trading style is and how you're going to play a lot of these. But overall, for me, if I were going to trade this, I'd probably look at selling, an iron condor or something like that. Or if I wanted to lean on one side or the other, it'd probably be selling the put spread, just in case. But this stock, let's see, on the last few earnings, the other thing that you can do, that's beyond technical analysis, is starting to analyze the earnings and how the stock moves on earnings days and on report days, because that might give you some indication as to what is going to happen in the days prior to earnings. And if you notice that, the stock always trails off or goes lower into earnings, which arguably we see, actually that's a nice little pop and then a trail off here. I mean, if you see that consistently, that might be worth trading on too. So not a guarantee, but possibly a higher probability likelihood that it's going to happen again. So anyway, that's it for today's video. I could ramble on and on this stock. It's interesting to see it. See a stock that's trading sideways, given that we've looked at so many different charts that have been up higher over the last few weeks. So I do love the fact, again, that this stock pays, it's paying $2 a year in dividends, right? So when you're talking about a $30 stock, I mean, 2 divided by 30, that's a 6.666 kind of evil percent dividend or percent return, just for owning this thing and keeping it in your portfolio. Not to mention any additional yield opportunities you have, like covered calls and that sort of thing against this stock. So that's it. Hope you guys are enjoying these videos. Thank you so much for subscribing. Thank you for liking and commenting. Yeah, let me know what you're thinking. If you're in the mood to be nice. Hey, I'm sensitive. And I hope you guys are having a great week. Hump day is coming up soon, so I'll be making a video tomorrow. So get ready. All right. Happy trading.